Hi, I'm going to have a look at one of the things that we tend to find when we take on a new client that's been doing their own bookkeeping, where actually it's quite an easy fix if you're doing your own bookkeeping to give you a lot more information and depth on understanding your numbers. So I'm using the demo company here, so don't worry, I'm not sharing anybody's actual information in Xero. And all I've done is I've had a look at their profit and loss report, which is a real accounting techie way of saying this is their incomings, so sales, and their outgoings, so their expenses, to see if we can understand what is going on with this business. And I've run it for a recent quarter, so up to the 30th of June 2025. So on the face of it, I mean, excellent. They've clearly done some bookkeeping in Xero, so they've been going through their bank reconciliation, adding in their sales invoices, all that good stuff. But what we've ended up with here is not a whole lot to tell you where the business is spending its money. So on the face of it, you've got £18,000 worth of sales for a 3-month period. So that's not too shabby. That's what, £6,000 plus every month. So if you're a one-man band, that's pretty decent. But actually, if you look at then what they've spent their money on, so we've got some purchases which have been separated out, and then a whole ugly load of stuff sitting in general expenses, we can see that the profit at the bottom, so this is basically what's then available for them to take home and what's going to have your tax paid on it. So you're not even going to take all of that home realistically because you're going to have some tax to pay on it. Actually, instead of having £6,000 a month, which feels really quite healthy, you're more like £600 a month when you look at the bottom line. So my question would then be, what is going on with this business? And we really can't tell because we've got an enormous wodge of stuff underneath general expenses. So what I would suggest instead, when you're working through and adding in your expenses, your outgoings, maybe you're working through your bank reconciliation to code stuff to different places, have a think about what that expense actually is. So if I look at the all improved version, this is the same period. So you've still got your £18,000 plus of sales. You've still got your not as good £1,900 pounds worth of profit. And then we've still got our purchases there. But instead of everything being lumped in general expenses, we suddenly have a wealth of lovely information as to what this business has been spending their money on. So we can see that by far and away, the biggest thing that they've been spending money on is advertising and marketing. And that could be for a couple of different reasons, right? It might be that the business is fairly early stage and what they're doing at the moment is they're doing a lot of advertising to try and build up their customer base, to try and grow this top line number. And then you go into a different set of questions of, are we getting return on investment for the money being spent on advertising? Are we getting bang for our buck, if you like? They've also got, we've got £2,900 here on rent, plus some other bits that relate to having premises. So you've got your light, power and heating, for example. So those are kind of fixed costs, if you like. So if you've got a commercial unit of some description, chances are you've had to enter into a 3-year or a 5-year lease. You've not got a lot of choice as to whether or not you're going to be paying that for the next period of time. So you need to make sure that whatever you're then generating is then covering those sort of fixed costs. The other thing that's really interesting for me looking at this is that there's nothing here to show that the business owner is taking anything from the business. So I can't see a salary in here. It doesn't look like they've got any team either. So is that correct? Is that missing information? Is this £1,900 worth of profit even correct? But you can see that having one line telling you about your outgoings versus a dozen lines here gives you an entirely different view of the world. So big tip number 1 is really to try and split out those expenses, have a think about what they relate to, and then if it's for advertising, code it to advertising. If it's for travel, code it to travel. Don't just junk everything in general expenses because it's easy. The other implication, if you like, of putting everything in general expenses is if HMRC happen to pick your accounts to review, they will want to have a lot more information if they start seeing that there's just a load of stuff junked into general expenses, because they've got no idea if it's stuff that's tax deductible or maybe like entertainment there is actually not tax deductible. So maybe actually instead of having like £44, which you can see very easily on this breakdown here, maybe there's, you know, thousands of pounds being blown on nights out and entertainment of one sort or another, and then they wouldn't give you any tax back on that anyway. So this sort of breakdown, as well as being fundamentally important to help you to run your business effectively, also means that HMRC will have a lot more reliance in your numbers that have been filed on your behalf. So that is your Xero pitfall for the day. Hope that is helpful.